Okay, so we've got our hands on this really dense, pretty technical stock report for Beyond Meat. Now, on the surface, it's just a bunch of numbers and jargon, right? But buried inside all that data, there was a story. So today, let's decode it together and figure out what this thing is really trying to tell us. So, here's the big question we're trying to answer. If we just tune out all the noise, all the headlines, what is the data itself saying about Beyond Meat's stock? For the next few minutes, think of us as financial detectives, piecing together all the clues from this one single report. All right, here's our starting point. According to the report, as of October 29th, 2025, Beyond Meat stock is trading at just under $2, $1.98. Let's just lock that number in our minds. Now, get this. Just 1 week earlier, on October 22nd, that same stock was trading at $3.58. I mean, that is a massive, massive drop in a super short amount of time. And that crazy swing, that volatility, is really the first major clue in our whole investigation. So let's start by kind of examining the scene of the crime, if you will. We need to get the immediate context. What's been happening over the last few days of trading to really see how we got from that high all the way down to our current low. And yeah, this slide just lays out the drop perfectly. Just follow that close column with me for a second. It goes from $3.58 down to $2.84, then to $2.19. There's a weird little dip to $1.81 before it kind of settles at our current $1.98. It's been a total roller coaster, for sure, but the direction is, well, it's undeniably down. So the report's first takeaways basically confirm what we just saw. It flags high volatility, no surprise there, and a slightly bearish trend. But what's really interesting to me are those last 2 points. A strong trend presence means this downward move has some real force, some real momentum behind it. And that high volume, that just tells us a ton of people are trading, which is kind of like adding fuel to the fire. Okay, but daily prices are noisy, right? They jump all over the place. To be good detectives, we have to zoom out and look for the bigger pattern. And that's where we turn to one of the most basic tools in the box, moving averages. Think of it like this. Looking at the day-to-day price is like driving on a super winding road. You can't really tell what your overall direction is. But moving averages, they're like looking at that same trip from an airplane. They just smooth out all those little turns and show you if you're generally heading north, south, east, or west. And the report's averages, well, they're crystal clear. In the short term, the price is way below the 5-day average, so that confirms all the recent pressure. But here's the kicker. It's also way below the 200-day average. And that's the crucial point. This isn't just a bad week we're looking at. This is part of a much bigger, much longer-term downtrend. Okay, and now, this is where our little detective story gets really interesting. The market is almost never simple, and this report is no exception. It is full of conflicting clues, data points that seem to completely contradict each other. And this is the real tension we need to try and unravel. So, let's look at the first piece of evidence. This one actually hints that things might be about to turn around. It's like a little glimmer of hope for the stock. Now, without getting way too technical, oversold is basically a signal that the selling might have just been overdone. You know, imagine a pendulum that's swung way too far in one direction. This indicator suggests that maybe, just maybe, the selling pressure is exhausted and the stock could be due for a rebound, or what traders call a bounce. But just as we find a reason to be a little optimistic, the report hits us with a really strong piece of counter-evidence, a clue that points in the complete opposite direction. So, OBV, or on-balance volume, think of it as a money flow indicator. And a big negative number like this suggests that on balance, more money is flowing out of the stock than is flowing in. It's a real sign of weakness, and it confirms that sellers are still very much in control, which directly contradicts that whole oversold signal we just saw. So, with all these mixed signals, how does the report even begin to try and predict what happens next? Let's move on and see how it takes all this conflicting data and actually tries to forecast the future. You know, the report doesn't just throw a dart at a board, it follows a process. It starts with a time series forecast. Then it factors in other technical tools that measure momentum, stuff with acronyms like RSI and MACD. It accounts for that potentially positive oversold condition we saw, and then it puts it all together to come up with a very specific, calculated prediction for the next day's opening price. The report also gives us a kind of map of the battlefield. Think of these as the key levels. Support is like a potential floor, where the price might stop falling. Resistance is a ceiling it might struggle to break through. And the pivot, that's the central point the price will probably hover around. These are the numbers that traders are going to be watching really, really closely. And now we get to the final act of our investigation. The report takes all the clues, the trends, the averages, the conflicting signals, and it lays out 3 possible future scenarios: a bullish case, a neutral case, and a bearish case. First, the optimistic path. In this version, that oversold signal we saw earlier turns out to be the real clue. A wave of buying comes in, and the price actually manages to break through that ceiling at $2.28. This is the bounce scenario everyone's hoping for. Next is the neutral case, where, well, nothing really happens. The buyers and the sellers basically reach a stalemate. The stock just kind of trades sideways, stuck in a narrow range around that $2.05 pivot point, just waiting for some new piece of news to push it one way or the other. And finally, the bearish scenario. In this version of the future, all those negative clues, like the long-term trend and the money flowing out, they win the day. The price breaks through that floor at 174 and just continues its downward slide, maybe even heading towards that 52-week low. And honestly, this quote from the report itself is the perfect summary of this entire investigation. It's a total paradox. You've got high volatility, mixed signals, strong trends, but bearish averages that are pointing to some pretty significant risks. It just captures all the confusion and the tension perfectly. Which really just leaves us with this one final thought. After decoding all the data, the charts, and the conflicting signals, the clearest conclusion from this report isn't really a prediction at all. It's a picture of pure uncertainty. And in a stock this unpredictable, maybe that's the most valuable piece of information we can possibly have.